Hi everybody. In this video, you will see the meaning of break-even point. We will use this sample business. A business runs by Rose. This is a business of home-based cupcakes, and the price is $4.50. Unit variable cost per cake is $2.50, and the total fixed cost is $300. Okay, what is break-even point? Break-even point is the level where a business total revenue is equal to total cost. In CVP analysis, total cost equal to total fixed cost plus total variable cost. So break-even point is a point where the business profit is zero. See here, total revenue equal to total cost, so the profit is zero. Or it is a point where a business does not make any profit, and at the same time, it does not make any loss. Break-even point can be seen in a graph. So easier for you to understand the break-even point if you see this graph. So we use the Rose cupcake business. So for Rose cupcake business, if we draw a graph for total revenue and total cost, the graph will look like this. Okay, this is dollar, this is quantity. Okay, if you plot the total revenue line for Rose business, then you will get a line like this. 1 unit of cupcake, the price is $4.50. 2 units of cupcake, the price is the revenue is $9. 3 units of cupcakes, then it is $13.50. So you will get a total revenue graph, something like this. And if you draw total cost graph for Rose, then you will get something like this. The fixed cost is $300. So total cost is total fixed cost plus total variable cost. So you will get a graph like this, graph for total cost. Okay, this is the graph for total cost. Total cost equal to total fixed cost plus total variable cost. Okay, this is the point of break-even. Break-even point. It is a point where total revenue equal to the total cost. Break-even point can be seen from two ways. First, we can see the break-even point in terms of quantity. How many cupcakes Rose has to sell to achieve this break-even point. So if you do the graph properly, you will see that Rose has to sell 150 unit cupcakes to achieve the break-even point. And also, the break-even point can be seen in terms of dollar. In terms of dollar, this is called break-even point in terms of quantity. This is called break-even point in terms of dollar. Okay, break-even point in terms of dollar is like this. It shows that how many dollar of sales has to achieve to get the break-even point. So if you do this graph properly, you will see that Rose has to sell $675 of cupcakes to achieve the break-even point. For a businessman, most of the time, break-even point is the first point that they want to achieve, because before the break-even point, the business is making loss. Why before the break-even point the business is making loss? Because before the break-even point, total cost here, the line of total cost is higher than the total revenue. So total cost higher than the total revenue, then the business is making loss. After the break-even point, the total revenue is greater than the total cost. So in this area, the business will make profit. So for Rose, it is important for Rose to achieve the break-even point as soon as possible or as quickly as possible, because after the break-even point, Rose can make profit for her business. Before the break-even point, Rose will or is making loss. There are at least 3 methods that you can use to calculate the break-even point. 3 methods to calculate break-even point. Okay, the first method is the graphical method. Okay, the graphical method is like this. You have to draw a graph, and then you can identify the break-even point. This method is not very practical because it takes some time to draw the graph, and you have to have a graph paper. The second method that you can use to calculate break-even point is called equation method. Okay, this method uses the equation of total revenue equal to total cost. The third method is called contribution margin method. Okay, this method is the easiest one. You just have to memorize the formula to calculate the break-even point in term of quantity and in term of dollar. Thank you very much. You can see the way to calculate the break-even point uses these methods in other videos in this playlist.